Good evening, everyone. Anthony, Wall Street Trader. It's 8:06 p.m. Eastern Standard Time on December 28, 2021. This is not financial advice. It's educational. Click the subscribe, share the video, click the thumbs up. We're here to talk about Chainlink. And man, we were getting someplace. But hit 24.40 and pulled all the way back. Now we're at 20.74, but we were as low as 20 and a quarter. So what's happened? Well, Bitcoin's what happened. I think everyone probably knows by now that Bitcoin is really clearly the reason why much of the altcoin market is down right now. So we did pass this area of resistance here. At least we're not all the way down here. Remember 1767? Well, we're not down there, but we are closer to the $21 line right here. So I think eventually, soon enough, we'll be back over this in short order. We're going to go into exactly what's going on with Bitcoin because that will clearly hopefully calm some of the fears out there related to where the price action is on this thing. A lot of different myths out there about the reasons why it went down, and I think there's one that's not being spoken of that you should know about. We're going to talk about that in just a second, but in the meantime, let's go over to Link Bitcoin to just kind of like see what's been going on. This thing is still on its way up. Now remember, Bitcoin has really took a tumble. But yet, and this one took a tumble too. Link to Bitcoin also took a tumble, but make no mistake about it, is still charting a course higher. And as you can see here, it's still going since the 15th. This thing continues to go higher. And I don't think it's going to drop below 42.50 at this point. We're at 43 and a quarter. I think the next resistance area around 44.62. We'll see how this thing plays out. But let's go over to Bitcoin. A lot of things happening here. We currently have a floor of support. Now, by the way, I used my logarithmic scale last time. A lot of people, it normally doesn't really matter if you're looking at a month and a half worth of price action with this level of volatility. But in this particular case, I'm going to show you where it does. Now, in this case, we had this downward broadening wedge, and it looked like we were dropping back into the channel. And it wouldn't have mattered either way because we still have this clear support here. Sometimes these things wick in. Now, a couple things. If I yank the logarithmic scale off and I reposition this turquoise resistance line back snugly to these top ends of the prior price action, as you can see, I'm just going to pull it in a little, right, so you can see it, down here, right, to tighten it up to these lines. As you can see, we never really broke into the wedge. Now, it's neither here nor there. The main point is that some people will argue to use the log or not the log, but it will make a difference in how these are drawn sometimes. Regardless, I'm going to keep the log on and use that because it seems to be the one that has been more reliable for me. Now, in the meantime, we do have an area of support at 46, the high end of 46,000. So I think we're going to wind up 46,800, should be a reasonable area of support. Now, a couple of reasons for the downturn. There's one out there that I disagree with, and that has to do with the fact that the Fed is taming inflation, and therefore rich people don't need the Bitcoin hedge as much anymore, so they're selling into it. Well, I don't agree 100% with that. I think most rich people are astute enough or smart enough to know that inflation, you can't just turn it around in a day. This stuff is a multi-year process. So I don't think that that's the real reason. I think the real reason has to do with the fact that the crypto tax code is evolving into next year. I think it's going to be a little harder next year to be selling your altcoins because you're going to take a slightly bigger hit. So I think what people might be doing in this last part of the year is to sell their assets to take advantage of this year's tax code over next year's tax code. Not because they don't like the asset, but because they want to pay taxes this year on it because it might be less of an impact for their gain than next year. So what typically people will do in these cases is they will sell it and then buy it back 20 to 30 days later in next year, right? And then they'll just hold it beyond next year in hopes of a better favorable condition in 2023. So my view is a lot of people are selling. This is the time of year when a lot of these tax sales happen and people sell it because they want to take advantage of this year's more lenient tax code in in favor of next year's tax code. And that's what I think is going on here. Now, Bitcoin's recovering a little bit marginally at 47,896. But again, I think this is just for the week. And I think it's a bit scary for a lot of people out there. Just hang in there. This stuff needs some time to work itself out. Anyway, Bitcoin dominance is going sideways. Nothing stellar here. It's just the same old, same old. I don't think we're going to see much action. I think we go sideways for a little while, at least through the week into next week. But I do think Bitcoin will be rebounding very, very soon. Some people are calling for a wick all the way down to 44K. If that happens, I'll definitely buy some more of that. Right now on Chainlink, 2073, I don't think we're going much further than this, folks. I think we're going to wind up turning around here. I think we've already hit our low. Looks like 2030. If I zoom out a little, zoom into this a bit more, it looks like we could have just hit that bottom right around here. This seems to be roughly another area of resistance back here and possible support now. So we'll see how this plays out. I think Bitcoin levels off, maybe goes down a couple more percent, but not much more than that. But, stay tuned. We'll be in touch tomorrow.